TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow flat. NASDAQ is down 11. S&Ps are off 2.5. Gold contracts down $14, trading at $1,122 an ounce. Silver down 17 cents at $15.23 an ounce. Platinum is down 17 at $9.59. You have copper market off a penny and a half at $2.30 a pound. Light sweet crude up 88 cents at $47.02 a barrel. Bonds, the 10-year down 3 ticks, 127.08. The 30 down 8 at 155.16. Now, both the 10 and the 30, folks, have been pulling back last couple days on lighter volume. I suspect what they're going to do is go after their lowest swing point from September. They're right next to it right now. We'll see whether they reject that price. The volume is lighter. We'll see if we get a rejection of price. King dollar. King dollar's up 517 ticks, trading at 97.50. The euro is down 71 at 109, and the yen is trading at 121.17. If we go over and we take a look at the S&P, what they have is this. We take a look at the SPY. What the SPY did yesterday is that it got over its benchmark. The benchmark that we're talking about is where the downdraft had started in August. We take a look at this. What we hit yesterday. Yesterday, you got to a price point of 210.62. Your benchmark on the SPY is 208.28. That's where we came down on the 20th. The longer you stay over that, the more probability is that it's going to run to the May highs, which is the 213.75. The NDX 100. Now, this one's going to get, this went over its highs of July. The high that we're talking about inside the Qs of 114.39. And we'll see whether it's going to hang up there. But in both cases, you got over those highs. You had lighter volume, but price held. We're still in window dressing. We'll see if, in fact, the buy-in continues. Yesterday, there's no doubt you had the buy-in inside this market. Light volume, extraordinary light volume, too, by the way. But you had the buy-in happening. Gold contract. Okay, so check it out. What we have with gold is this. Gold's trading at 11.22. 1123.70. You're coming into your sign of strength from October 2nd. October 2nd, we went from a price point of 1103 to 1140. You did 190,000 contracts. We're going to end up doing about 125,000. We'll see where to get a rejection of a lower price out here. What you still do have is that many of the gold and silver equities continue to basically not get smoked as gold has pulled back from the last Wednesday time frame when the Fed had their meeting saying that they are looking to go up on the short-term rates in December. When you look at the rest of the world as to where the 10-year rate is, folks, it's still going to be really hard to go up on rates. Now, King dollar. We got King dollar. King dollar's up a half a penny today, 517 ticks. King dollar is in a confirmed ABC structure on the way up. The price projection is 1.00, and right now we're at 97.51. It's going up today on dramatically lighter volume, but bottom line is that it already is a complex ABC structure on the way up. Bonds. What do we have with the bond market? The bond market, bottom line, is pulling back. You have lighter volume, dramatically lighter volume, by the way, too. The 10-year only has 369,000 contracts right now. You're going into 1.4 million contracts. So the bond market looks like it's just about ready to turn around, go topside once again, reject price once again. When you start putting all of that together, this is the last day of window dressing. What I expect you're going to see out here is that we're going to have high volatility in the marketplace. We'll see whether these prices can stay at these levels or, in fact, as Asia pulled back last night, Europe has pulled back slightly this morning. I suspect that we're going to have a slight pullback out here today. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking it right back here tomorrow morning, 10 o'clock.
If If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.